Hi, how is the Ukraine conflict currently impacting crypto in general and Bitcoin specifically? That's the question of this video, and in order to answer this, we will look at on-chain data and we will also look at derivatives data. So how are currently active traders behaving in this environment? The data we are concretely looking at is taken from the Glassnode Newsletter. So every week, Glassnode brings out a new newsletter describing their recent findings. And what we will do over here is we'll go through 9 charts that describe the current situation, the current dynamics in detail, to in the end get an idea where this market might be heading. So let's start off with the futures term structure. Now, what is this? Futures are derivative contracts. So you can go to a centralized exchange such as Binance or FTX or Huobi, and you can enter a futures contract which says, I want to get Bitcoin delivered at a certain point in the future for a specific price. And the further out that date is, the higher the price usually is. So this is an indication where traders expect the Bitcoin price to be in the future. And currently this premium, so the delta of the futures price 1 year from now compared to today, it is relatively low. It's only 6%, which means most people getting into these kind of futures, they anticipate not too much of a price growth for Bitcoin. Traders are rather cautious. So that's one indication among many that show people are getting risk off. The potentially rising interest rates, the conflict around the Ukraine, it changes the focus from capturing opportunities to rather preserving capital. Now we see something very similar in the open interest of those futures. So how many of those derivative contracts are actually currently open? And the higher it is, the more risk we potentially have that a deleveraging happens, right? So when we don't have a lot of futures open, people are rather cautious, which might then precede a rally. If we do have a lot of futures open, it means people are risk on. And so we are potentially in a rather heated environment. And so right now we are comparatively low. People are cautious, which is rather positive than negative. It doesn't mean we have to turn around, right? We have been at these levels before and we continue to bleed. So this is by no means a perfect indicator for predicting prices, but still it is some kind of an influencer. You don't want this level to be extremely high, which fortunately currently is not the case. People are getting cautious. Now we don't just have futures, right? We also have options. What's the difference between options and futures? With a future contract, you bind yourself to buy or to sell that Bitcoin in the future. This is an obligation for you. You have to fulfill this. With an option, you buy the right to buy or to sell something. So a call option is a right to purchase an underlying asset for a specific price in the future. If the underlying rises during the lifetime of the option, that's positive for you because then you have this right to buy this for comparatively low, right? The value of your option increases. But if the underlying falls below that price where you've got the right to buy, you wouldn't exercise your option. So the value of your option goes to 0. And so that's a call option, and a put option is pretty much the opposite. You buy the right to sell a certain asset at a particular point in time for a specific price. And so what is this over here? This is the ratio of open interest of put to call options. So when this is very high, it means people are bullish. When this is very low, it means people are bearish. So we come out of a situation where people were comparatively bearish and they now tend to get bullish, but still compared to where we have been a year ago, we are way more cautious, which is interesting, right? The price, which is underlying here in gray, right? This very thin line over here, this is the price. The price was way higher 1 year ago, but the optimism was way higher as well. Now people are rather pessimistic, starting to become somewhat optimistic, but the price is comparatively lower, which indicates that the masses, they are potentially not correct, right? You should rather be bullish when the price is low and bearish when the price is high, but that's not what's happening. But still we can see that we are potentially coming out of a situation where people just stood on the sidelines. There's still more puts than longs, so people are pessimistic, but that's somewhat changing. And this is the exact same thing, just broken down in more detail. So again, the puts here in purple, the calls here in green. And so calls means you're bullish, puts means you're bearish, you're buying the right to sell something. And there's way more puts than there is calls. Most traders, they're currently rather looking to protect their portfolio. They open up positions to not lose too much in case the Ukraine conflict continues to escalate. That's the main demand right now. It's not so much about searching for opportunities and levering up the portfolio with call options. Now we are halfway through the content. In case you enjoy this video, feel free to share this with your friends, because obviously this would help the channel grow, which means a lot to me. Thank you. So let's now move from the derivatives market to the spot market. In other words, we just look now at what are traders doing directly with centralized exchanges. Let's now look what's actually happening on the Bitcoin blockchain itself. So we start out with the exchange net position. How is money flowing in and out of the exchanges? And let's look at this historically first. Again, we've got around 1 year of history over here. And we can see before the price tends to go down, we start seeing inflows. So Bitcoin moved to the exchanges in order to get sold off. And once that stops, once there isn't more supply flowing onto the exchanges, once we see rather the opposite, Bitcoin flowing out, that's when the price can start appreciating again. And so again, in Q4 of last year, we saw an inflow, which then triggered negative momentum in the Bitcoin price. Right now, we see again outflows, which is positive. You want exactly that. You want the order books to get thinner on the exchanges, because that means that any buy order could move the price more. Money flowing out of the exchanges is a positive thing, and that's currently what's happening. Now, nobody really knows where the price will actually go, right? This is all just speculation. We simply try to look at as many valid data points as possible to then come up with some kind of probabilistic model, right? We shouldn't be deterministic about this. We can't really be for sure where something is going. But when Bitcoin is flowing out of the exchanges, maybe it's time to continue dollar cost averaging in and to actually go against the general market. Everybody now is very cautious. People don't anticipate the price to go up, but maybe that's exactly the point in time where it does make sense to buy. Maybe, right? Now here's another interesting chart, the total supply held by long-term holders. In a video I've done a week ago on Bitcoin, we see this chart not just in thousands of Bitcoin, but as a percentage of total supply and versus the short-term holders. And what we can see on that chart is that the higher this value is, the more likely we are to go to rally again. Because you don't want a lot of supply to be held by short-term holders, right? When you are speculating in Bitcoin just for the short term, then you might sell quickly again when the momentum doesn't continue. But the long-term holders, they hold long-term per definition, right? So they dry up the supply. The more Bitcoin is in the hands of long-term holders, the better it is, because the continued dollar cost averaging over time will help the price potentially appreciate. Now, unfortunately, we don't see a lot of an increase in the last few months of that total supply held by long-term holders. Ideally, we want to see a new all-time high over here. The higher this goes, the better. So we simply have to continue watching this metric. If we see this orange bar chart in a continued upwards trend, we can be even more bullish on Bitcoin over the long term. Now, 3 more charts. This is more short-term oriented. So this is the supply held by short-term holders. That's the line over here expressed as a percentage. But then we've also got a color-coded differentiation over here. And when you have most of that area in dark red, it means the short-term holders there in profit. When you've got most of this in light red, it means most of the short-term holders are in losses. So when we look at this here during the Corona crash, when a lot of short-term holders are in losses, basically all of them, then we might turn around. People might buy up. The same is true the other way around, right? When most people are in profits, maybe we see a short-term correction. People might get back into losses, potentially. And so when we look over here in this Q1, Q2 crash, the summer depression of last year, a lot of people have been in losses. And once almost everybody had been in losses, that's when we turned around again and had a short-term rally. And the same is true here in Q4 of last year. Once everybody of the short-term holders was in profits, that's when we had our peak, when we turned around again and entered bearish momentum. We have been in almost 100% loss territory just recently with this recent bottom. And now again, we see a potential rally picking up. So short term, just based on this metric, this is bullish, right? There is some kind of a fluctuation over here, right? So nobody knows for sure if this can continue. We did have this in the past where we first broke out a little bit, but then retraced back down again, right? So maybe we see this again, who knows? But right now, comparatively speaking, this rather tends to indicate that the rally can continue. We have been at a maximum loss territory and now come back into profits again. Let's now look at the traditional markets, the ETF market. So what's interesting about the Canadian ETFs is that these ETFs are spot ETFs, different to the US ETFs. The US ETFs are just futures ETFs. Here you've got spot ETFs. So when you buy a Canadian ETF, the ETF has to buy real Bitcoin at the spot market. So this is real demand that gets put maybe into retirement accounts that then instantly translates into demands on the spot market. And so this is an accumulative chart. So when we look at this, we see an initial rally over here. And since this summer depression, the level is pretty much constant. One might argue, though, that when you look at this very closely, that maybe there's some kind of DCAing happening here, right? Dollar cost averaging. People are potentially buying in here every month because this is a relatively constant rise. It will be interesting to see how this develops over the next year. If we will continue to see a relatively slow but steady increase, this would then indicate that people are really putting Bitcoin into their savings accounts potentially, which is, of course, over the long term, exactly what we all want. Because again, that's long-term demand. That's what's helping Bitcoin to grow over time despite the short-term volatility. What we've got over here is wrapped Bitcoin. Now, what's wrapped Bitcoin? When you own Bitcoin, you can bridge this over to another blockchain. So you can use, for example, the REN bridge, REN bridge, and you can send your Bitcoin to a specified address and will then unlock wrapped Bitcoin, so a representation of your Bitcoin on another blockchain. And that other blockchain potentially can interact with this wrapped Bitcoin, right? You can maybe deposit your wrapped Bitcoin and earn interest on this, because maybe people trade Bitcoin, they swap it back and forth, trading fees occur, and you can benefit from those fees and get a yield on your Bitcoin. So that's why people use wrapped Bitcoin. And so we see an increased adoption of that wrapped Bitcoin, which is very, very positive. It's unlikely that you're going to wrap your Bitcoin if you plan on selling this very quickly, right? Most people wrap their Bitcoin in order to do exactly what I've just described, in order to gain yield on this, in order to hold this for the long term. So this can be a measure of how people are committing to the long-term development of the Bitcoin price. And this is great. The more this grows, the better. Now, if you enjoyed this content, you're very likely also going to enjoy the premium content at thebitcoinstrategy.com. Link is in the video description. We've got daily market updates around Bitcoin, around Ethereum. We've also got exclusive content on how to construct a portfolio, for example. And of course, a private chat where you can ask me any questions. Feel free to also leave a comment. It will help the algorithm. Doesn't need to be too fancy. A simple hello would already be appreciated. And of course, if you haven't yet subscribed, feel free to do so as well. We've also got a public Telegram channel. Simply check the links below here. Be careful though, there are people that impersonate me. So I'm never going to message you directly or anything. These are scammers. So be careful when using Telegram. Thanks for watching and see you next time. Bye-bye.